Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. We are back in our Vegas digs, and I like doing videos in this studio. I gotta say, Mike, I like it here in Vegas. This is a great place. What am I hearing? Number nine? What, the ninth client? Well, it wasn't me, baby. I was just back home, and boy, are you in trouble, Spitzer. You of all people, you came after everyone on the block. Are you crazy? All right, enough of that. Number nine? Number two, am I hearing it again? All right, listen. Tomorrow is Wednesday, 03/12/08. And we got us a green OMNI in the S&P, but I'm going to start this video right off by saying this, traders. Do not fall in love with the upside here. You know what? Maybe you didn't hear me. Do not fall in love with the upside. I am telling you right now, maybe a couple of day pop, if that, and that's about it, traders. We're going right back down where we came from. Yes, we're due for a slight pop after that push down, but the economy hasn't changed. Fundamentals are the same. The soaring commodities are still soaring. The CRB index is going through the roof, and crude is more expensive now than it was in the last video we did. I am telling you, there's a lot of weight on this market, so don't fall in love with the upside. But yes, we are bullish for tomorrow. We're expecting at least a pop. I'll tell you this right now, I'm going to be very nimble with my trades, traders. If I get in and I get long, I am getting out at the first opportunity, and I don't think I'm going to buy another dip. I'll tell you that right now. I'd rather be selling these rallies, but everything that I look at to give me a clue whether we should be going up or down for tomorrow, whether this is green or red, tells me to put a green OMNI on the board. So there we are. We got a green OMNI for tomorrow. And I think the ESH8 OMNI support will be in the mid to low 13s into the teens. We should pull back into the teens. There, you should probably get yourself long some S&P. That's the ESH8 for the Emini. OMNI's profit objective is the high 1340s. May even try to kiss that 1350 mark. We'll see. On the way up, I see resistance at the 1333, 34 level. And again at 1344 as we approach the high 1340s. Those should be your two areas where the market should find some resistance, a little bit of stall on the way up around the 33, 34 area. And again, of course, around the 1344 area. We'll see. You know what? I'll tell you what, I looked at a lot of other markets. I really didn't see the big bull buy signals in the NASDAQ or the Dow Jones Transports, which I deemed are the leaders of the Dow and the S&P. So if the leaders don't want to go, I'm being nimble with the buys that I'm going to do in the S&P. I'll tell you that right now. You know what? We got something else for tomorrow. We like the sugar traders. There's a trade right on the site right now. The site is www.livewithoscar.com. If you go to the site, you should be able to see a sugar trade and an S&P trade geared for tomorrow. Sugar is bullish. It has a green OMNI. We also are looking at the Aussie dollars. I think the Australian dollars are looking good here as well. But I got a sugar chart I want to show you right now, traders. So let's go to the charts and let me show you some reasoning behind A, why we should rally up in the sugar, and B, why we shouldn't last too long of a rally in the S&P. Most of that can be read right in the sugar chart. So let's go look at the charts, traders. I'll be right back to you. Okay, traders, what you are looking at here is the May sugar chart, the SBK8, if you will. May sugar. The market looks very strong here. If you recall, we had done a video back in January 12th about the price when it was all the way down here and said it was way, way cheap, and it should likely have a big pop along with the coffee and the cocoa and the cotton, and they've all enjoyed a big rally since. We were down here somewhere, and now we're all the way up here, so far so good. We had a nice pullback the last couple of days, and now I'm here to say we should likely go higher. And why? Because we're going to enact our two-day rule. The two-day rule states if you're in a bullish market and you get the market to pull down for 2 days, you get yourself long. Here's it for instance. Market rallied very, very sharply here, dropped one big day, dropped second big day, and you can immediately have gone long after second big day. Another rally phase takes place, big drop day, another big drop day. Right after the second big drop day, another rally takes place. Now here, traders, we go all the way to the highs. We have a big down day, a second big down day, and I say it is time to go in and get long and expect that sugar to get over the 14 mark again. We're trading currently 1336. So we're looking at 1346, excuse me. So we're looking for a good 50 to 55 point pop in the sugar very shortly based upon the 2-day rule. The 2-day rule works really, really well. With that in mind, the S&P right now is in the opposite. It is in a bear market, and it's had an up day. I think it's going to have another up day, and then it's pretty much going to be it. After the second day up in the S&P, you should come back down, just like if the second day down in the bull sugar, you should go back up. Let's see what we get out of that, traders. Pay attention to the charts, pull up your own sugar and S&P charts, and see if you don't see that for yourselves. Okay, traders, so you've seen the charts. I'll tell you right now, that sugar chart, after 2 days, 2 big days pulled down, is heading right back up, and I want to get on that bandwagon. And let me just give you a quick illustration in case you didn't get that right. If you are in a bullish market, if that market spends 2 big days going down, 2 big days down, day 1, day 2, after day 2, you become a buyer. If you are in a bearish market, after 2 big up days, you become a seller. That's the way it normally works. There is no science here, traders. There's no exact science and technical analysis. But I will tell you this, if you follow that 2-day rule, and they got to be big days, either up or down, depending upon the market of your choice, you will find a lot of times it is the opportune time to get yourself back into that market. So keep that 2-day rule in mind. Traders, don't try to do this alone. I say this in every video. Never trade alone. Come on down to the site. Join yourselves a membership and join the ever-growing crowd of Omniacs. The army is growing every day, and we are having a great time helping one another in those chart rooms. If you come to my site, we have 2 chat rooms that are open at all times, the premium room and the open trade talk room. I am in both of those rooms for you on camera and microphone to help you get through these days. Traders, there is strength in numbers. I'll tell you that right now. The more people you have around you trying for the same thing, the more you'll learn, the better it is for you. So make sure you come on down to the site and join us. We have now, I don't know how many YouTube videos we got, Mikey.
284.
Oh, he's guessing. I can tell his guess face is on that one. He says we got 284 videos like this waiting for you on YouTube with a lot of chart techniques and analysis to help you learn. Come on down to the site. It's www.youtube.com/futures analysts. When you get there, subscribe to the video so YouTube will let you know whenever we put another video out. We've got a lot of good videos there, traders, so go do your homework. Check out some of these videos. Let you see for yourselves what we have been teaching others and what we can teach you if you come on down to the site. Traders, as I always tell you, shoot me out your emails. Send them to Oscar@futuresanalysts.com. I will be there to read your emails and reply back to you. No, I haven't replied for emails in the last 2 days because I took a little time off. And you know what? I enjoyed it, baby. You got to reset the circuits every now and then. And that's what I did for the last 2 days. But I will get back to your emails if you shoot them out to me now. And I guess that's about it, right, Mikey? The phone number, 702-629-4755. Traders, remember, sugar looking good. Australian dollars looking good. S&P, be very nimble if you get long. Do not fall in love with the upside no matter what you do. And make sure you come on down to our site so we can help you. Traders, always keep your emotions out of trading. Emotions in trading should never come to the same plane. They should never be near one another. If you get emotional, your heart starts to pound, your decision-making process goes wacky, and you get yourself stopped out at all the wrong times. You're selling when you should be buying. You know the drill, traders. You've done this to yourselves before. One of the best ways I can help you with keeping keeping your emotions out is to say this to yourselves every day, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.